Are ETFs the easiest way for new investors to begin? Imagine planting a small seed today that can grow into a big tree over time. That's what investing with exchange-traded funds can feel like for beginners. ETFs are investment funds that are bought and sold on stock exchanges, just like individual stocks. They hold a mix of assets like stocks, bonds, or commodities, and aim to follow the performance of a specific index or sector. For families managing household budgets, sending remittances, or planning big events like quinceañeras, understanding how to start investing is key for building long-term wealth. ETFs are often seen as a simple way for new investors to get started. When you buy one share of an ETF, you are investing in many different companies or assets at once. This is called diversification, and it helps lower your risk because your money isn't tied to just one company's success or failure. For families who are careful with their spending, this means you don't need a lot of money upfront. You can start small and still spread your investments across many companies. One of the biggest reasons ETFs are popular with beginners is their low cost. Many ETFs have lower fees than traditional mutual funds. They are usually passively managed, meaning they just follow an index like the S&P 500, which tracks the biggest companies in the United States. This helps keep costs down, so more of your money goes toward your investments. You can buy and sell ETFs through online brokers, and many have no minimum deposit requirements. This makes it easier for families saving little by little, especially when balancing expenses like education, family celebrations, or supporting relatives abroad. Flexibility is another advantage. ETFs trade throughout the day, just like stocks. This means you can buy or sell whenever the market is open. If you need quick access to your money, you can do so, but it's best to think long-term and avoid making frequent trades. ETFs are also tax-efficient, which means you might pay less in taxes compared to other investments. This is helpful because every dollar saved in taxes is a dollar that can go toward your family's needs. However, ETFs are not without risks. You don't get to pick the exact companies in the fund, you buy whatever is included. Some ETFs focus on risky sectors or niche markets, which might not match your comfort level. Also, if an ETF has low trading volume, it could be harder to sell quickly, or you might pay more due to wider gaps between buying and selling prices. It's important to choose broad, well-known ETFs that track major indexes because they tend to be safer and more stable. For families managing multiple generations, ETFs can be a practical tool. They allow you to invest without needing deep knowledge of the stock market. You can start with small amounts, which is helpful when balancing household expenses or saving for future milestones. Since many Latino families prioritize sending money abroad, investing in ETFs can help grow savings over time while keeping initial costs low. Building credit and navigating financial aid are separate from investing, but having some investments can be part of a larger financial plan. Money saved in ETFs can help pay for education or emergencies, reducing the need to borrow. But it's wise to keep emergency savings in cash or very safe investments, because the stock market can go up and down in the short term. To understand some key terms, diversification means spreading your money across many investments to lower risk. An index is a group of stocks used to measure a market's performance. Expense ratio is the annual fee the fund charges, expressed as a percentage of your investment. The bid-ask spread is the difference between the highest price a buyer will pay and the lowest price a seller will accept for an ETF. In the end, ETFs are often one of the easiest ways for new investors to begin. They offer simplicity, low costs, and the chance to start small. They fit well with the financial realities of many Latino families who may be focused on budgeting, saving for family needs, and building a secure future. Remember, like all investments, ETFs come with risks, so it's best to choose broad, low-cost options and think long-term. Starting with a simple, well-diversified ETF can be a good first step toward growing wealth over time.